Double RSI is one of the most powerful tools you can use, but only if you know how to read it correctly. Most traders get it wrong. They overtrade and lose without even knowing why. In this video, I'm going to show you how to unlock the real power of double RSI on 5-minute and 15-minute charts. You'll see the trend, catch the right moments, and trade like a pro. By the end of this lesson, you'll know exactly when to trade, when to wait, and how to read momentum and trend like a pro. So stay with me until the end. Understanding RSI, momentum, not magic. Before we add any indicators, remember this. RSI does not predict the future. It does not tell you exactly where the price will go. What it shows is momentum, how strong the price is moving in one direction. Think of momentum like a car on a highway. When the car is moving fast, it goes straight. But when the driver wants to turn or stop, the car slows down first. That slowing is a warning. The same happens on the chart. When price movement slows, it can signal a possible change in direction. RSI helps us see these changes early. So treat RSI as a filter, a tool to read the strength and timing of the market. When you do this, you gain control. This is the mindset we'll use today. Now let's add the RSIs to the chart and see this in action. Indicators used. For this strategy, we only use 2 RSI indicators. That's it. No moving averages, no trend lines, and no extra tools. The first RSI, the yellow one, is the slow RSI. It shows us the market direction and overall bias. The second RSI, the red one, is the fast RSI. It helps us time our entries perfectly. Think of it like this. The slow RSI is the teacher, showing the big picture. The fast RSI is the student, reacting quickly to what's happening. Setting up your double RSI. This strategy only works on 5-minute or 15-minute charts, so make sure your chart is set to one of these time frames before we start. Let's set up the RSIs step by step. First, we should add the slow RSI. Go to the indicators section and add an RSI to the chart. Open its settings and select the length to 14. This is a classic stable setting. Next, go to the Style tab. Keep only the RSI line and the middle band and uncheck everything else. Keep the middle line at 50, make both lines thicker so they're easy to see, and change the RSI line to yellow, then click OK. Next, we should add the fast RSI. Go to the indicators section again and add another RSI. Open its settings and set the length to 8. This RSI reacts faster and shows short-term pullbacks. In the Style tab, keep only the RSI line, change its color to red, and make it slightly thinner than the slow yellow RSI, and then click OK. To make things easier, we should combine both RSIs in one panel. Drag the red RSI onto the yellow panel. Right-click on it and select Pin to Scale A. Now both RSIs share the same panel with the 50 level clearly visible. Now take a moment and look at the chart. You'll immediately see which RSI is called slow and which one reacts quickly, fast. This difference is the key to this strategy, and that's what helps you spot high probability entries. The core concept: direction first, entry second. Before we think about entries, we always check the trend first. Look at the yellow RSI, the slow one. It tells us the market direction. If the yellow RSI is above 50, the trend is bullish. We only consider buy trades. If it's below 50, the trend is bearish. We only consider sell trades. If it's moving around 50, the market is ranging and we do nothing. This is a no trade zone. Just following this one rule will automatically remove at least half of bad trades. It keeps you out of messy markets. Buy setup. Now let's see how to enter a buy trade using double RSI. First, check the yellow RSI. Is it above 50? Good, the trend is bullish. If not, ignore this setup. Next, we wait. Don't enter just because yellow RSI is above 50. Watch the fast RSI, the red one. It will usually pull back toward the 40 or 50 area. Why this happens, the yellow RSI stays calm above 50, and this tells us the price is resting, not reversing. When the red RSI turns up and crosses back above 50, while the yellow RSI remains bullish, that's our signal. Enter the trade at the open of the next candle. Take a moment to watch this on your chart. You'll see the slow RSI shows the big picture and the fast RSI shows short-term swings, and together they help you catch high probability entries without guessing. Sell setup. Now let's look at a sell trade using double RSI. First, check the yellow RSI, the slow one. If it's below 50, the trend is bearish. This means we only look for sell trades. If it's not below 50, ignore the setup. Next, we wait. Don't just sell because yellow RSI is under 50. Watch the fast RSI, the red one. It often pulls back upward toward the 50 or 60 area. Why this happens, the yellow RSI stays calm below 50. This tells us the trend is still strong and the market is just taking a short pause. When the red RSI turns down and crosses back below 50 while the yellow RSI remains bearish, that's our signal. Enter the sell trade at the open of the next candle. Real chart examples. Buy setup. Let's put what we learn into practice. Look at the yellow RSI. It's above 50, so the trend is bullish. This means we only look for buy setups. Next, watch the red RSI. It pulls back down toward 45 while the yellow RSI stays calm above 50. This is a resting price, not a reversal. Now the red RSI turns up and crosses back above 50 while the yellow RSI remains bullish. This is our entry signal. Enter the trade at the open of the next candle. For stop loss, place it just below the recent swing low. For take profit, aim for twice the distance of the stop loss. As we watch the chart, the price moves up smoothly and hits our take profit target. This is a clean, high probability buy trade using double RSI. Sell setup. Now let's look at a real 15-minute chart. Here the yellow RSI is below 50, so the trend is bearish. This means we only consider sell setups. Watch the red RSI carefully. It pulls back up toward 55 or 60, while the yellow RSI stays calm below 50. This tells us the trend is still strong. When the red RSI turns down and crosses back below 50, while the yellow RSI remains bearish, that's our entry signal. Enter the trade at the open of the next candle. For stop loss, place it just above the recent swing high, and for take profit, use twice the stop loss distance. As we follow the chart, the price moves down and hits our take profit target. Another clean, simple, and safe sell trade using double RSI. Okay, that's it for today's lesson. If the lesson helped you understand RSI better, please like the video, subscribe, and hit the bell so you won't miss the next trading lessons. Thanks for watching, and I'll see you in the next video.